Well, what can I say? The numbers still keep getting interesting and interesting, and the real question is here for our numbers in Central Florida: is inventory going up? Is it going down? Are rates going up? Are rates going down? And is the market really changing at all? And what could change the market, going forward? Hey everyone, this is Rayce Robinson, your favorite Florida mortgage broker. Hope you're doing awesome. And again, these are the numbers for Central Florida for May, which really cover till the end of April. Okay, so it's no surprise if you've watched the news, been anywhere, that the real estate market is on fire. Houses are consistently selling over asking price, and that's just the market they're in. In fact, I did a video recently on how to get your offer accepted in a blazing hot market, which I'll link down below in the description. So, what have the numbers done? So again, these are numbers to the end of April. So I like to always look at from last month into last year at this time. So this is always the most amazing numbers. Last year at this time, there were 7,659 homes on the market, which was considered still a seller's market. Now, obviously, it was a little more level, but we were still having, very fast times on the market. In fact, April of 2020, average times on the market was under 50 days. And we're at 42 days now. So it still tells you things were really moving pretty quickly back then. But 7,659 homes. Now we have 2,655 up until the end of April, which is, again, under 50% of the inventory. And so really nothing is changing. Last month there was 2,878, and this month there's 2,655. So inventory continuing to decline as far as demand going up because new home sales are staying about the same. Last month they were 4,268, and then to the end of April they were 4,081. So it did go down a little, but it's going down more of a function of inventory. I can tell you as a long-time person in the mortgage business, still actively involved with pre-approving people and talking to clients all the time. There's lots of people still getting pre-approved. It's just a lot more difficult to get your offer accepted, which we're going to talk about a little bit more in this video. So of that 2,655 homes, only 1,752 were houses. That means everything else was condos and townhomes. So that's only 1,750 opportunities for a home buyer to buy a house. Now rates are still hovering in that 3% range. My disclaimer always on rates, depends on credit, how much you're paying for that rate, all the junk fees most banks charge, if we have none. But anyways, just the average across the nation, rates are around 3%, right? So this is the number I like to look at, which is not, because days on the market say 42, but to me, that's kind of misleading if you're a buyer. What I like to look at is, okay, if I'm out there looking for a house, last month, there were 4,258 new listings that came on the market and 3,863 new contracts for that same amount of houses. So that's almost the same. What that tells me is the only houses on the market that are sticking around are the houses that are maybe way overpriced, undesirable for whatever reason, fixer-uppers, all these different things that could delay someone maybe wanting to buy that house. But if, pretty much any house that's coming on the market that's in an area that people are interested in, that's in the price point that is people are looking at, it's selling literally in a day. And the only reason they're not selling in a day is because a lot of the agents are making it maybe take 2, 3, 4 days as they're collecting offers, right? So they can have the most amount of offers to present to the seller. But really that's creating the gap on how fast some of these houses from the time they go on the market to when they sell. Because literally agents, are telling me, and this is really across the nation. I'm in some groups where we're in brainstorms and I talk to real estate agents and lenders all over. Most markets are having the same thing: lack of inventory, increasing prices, and that's the amount of time these houses stay on the market being really, really low. So with that being said, what do you do going forward here? And again, I always like to kind of give you my thought on how this year's shaping up, especially through the end of this year and maybe even into next year. So what's the market going to do? I say more of the same, and that's because rates are going to stay low. Now, if you are really into paying attention, to the stock market and all those things, the Fed is, there's lots of things going on with inflation. And if inflation were to increase, that can raise interest rates, treasury bonds, and all these different things. And there's no question in my mind, if interest rates go up, then the market will slow. That doesn't mean the market will stop, right? Or slow down, like go to zero kind of thing. But the market, of course, will slow down as rates go up, because that same house, the payment will increase. Now, does that mean you should wait? That's a question I probably get from a lot of buyers. And my thought has always been the same, which is you want to take your rental dollars and convert them into owning a home sooner rather than later. And you'd rather do that when the payments are cheaper, because the chances right now of the market having a big, I was looking back in 2007 and 8, which I was in the market, there was like some of the best areas went down about 30%, not to zero, 30%, which means they'd already had a run up to that point. And the odds of a 2006 and 7 incident happening again, in my opinion, which I'm about to do a video on later this month, is very low, because most people have a ton of equity. And in 2006 and 7, hardly anybody had equity, right? Most of these people are putting big down payments and all these things. So the market, as rates go up, may slow some, but you're still going to get nominal appreciation, especially here in Central Florida, where people are moving in from all over the country. So I don't really see that changing. All right, so that being said, for this video, inventory staying low, rates still staying low, lots of demand, and I really see that playing out through really the rest of this year, especially as the Fed keeps saying they're committed to keeping rates low. 2022, we'll see what happens. But for now, if you have any questions, reach out to me or my team. No lender fees, super transparent. Google me, see what other people say. And more importantly, let me know what I can do to help. Thanks.